Let's get ready to rumble. Kirk Spano here. October 3rd, and it looks like it's going to be a very scary October indeed, except we're getting that rebound rally that I talked about last week. So we'll see how long it lasts, but I will tell you, I don't expect it to last long. I think that there is still a lot wrong in the world. I think there is still a lot to be said and done on inflation. And I don't think that the Fed is going to pivot too quickly. I'm sticking with they're still a bit hawkish in a few weeks, November 1st and 2nd, and that it's not until December that they start to soften their stance. I hope that they soften their stance in November, but I don't know that, and neither does anybody else. I am likely to do some very serious scaling in, though, on the next leg down in the stock market. As far as my predictions go, this year we've pretty much nailed it. That's been good. We're heavy in cash. That's been good. The dollar has been a great place to be. Cash has not been trash. In fact, if you've held a lot of cash, you're probably feeling pretty happy right now. And it's a matter of when do you start to really scale in heavily. We've been scaling in lightly to small caps all year. The small caps seem to be beaten up. So do the emerging markets. I'm going to show you some charts, and we're going to figure out what to do next. So this is the interview I did with Forex Analytics about 3 weeks ago. And what did I tell him? I'm looking for a dollar peak. That was my main point, a dollar peak. And I also said that I was accumulating Bitcoin under 20,000. So let's take a look at the dollar. Does that look like a peak? Looks like it might be. Let's take a look on the year to date. I'll make it look a little bit nicer. So on September 8th, I said I was looking for a dollar peak. There we go. Got that little spike, and now it's coming off. Do we believe that that was the peak? Probably not. I would think that the dollar goes up. Shooter is suggesting that it can get way up here on an event if there's some sort of horrible black swan, but otherwise it looks like we're very close. And what happens when the dollar peaks? Well, emerging markets finish their decline, but even if we think about this from the broader viewpoint of long term versus just making a trade, we can pull up our favorite emerging markets fund, and we can see it's pretty low. And it's right in that buy zone, and it's been jitterbugging in the buy zone. Can it fall off the cliff one more time? Certainly can. Certainly can. Always can go lower. However, when you take a look at these companies, you realize that half of them are Chinese, the other half is the rest of the world, and they're both beaten up pretty badly. The Chinese are stimulating already, and I would expect their crisis is much closer to the end than the beginning. Of course, you have this Congress coming up in China to determine whether or not Xi remains president. We'll see. Again, a lot can happen if there are black swans from the countries or cartels that have been causing the trouble for the last year or two. We don't know if OPEC is going to tighten this week on their oil supply, which, as I have said from day one, high oil prices have really been due to OPEC manipulating the market, and then followed by Russia invading Ukraine. The fear is that they do something more desperate. We'll see. So I can't go all in on a lot of these things. But if you take a look, this is at a pretty strong support level on the emerging markets. If you consider that this was resistance twice, then broke through, and when it got down here again, it held as support. Now, will this hold as support? Hard to know. But if it does drop through support, we really have all-time lows not too much lower. So as I've told you, I have made my first purchase of Emqq. My next level is right here, about $24 a share is where I would buy a little bit more, because it goes all the way back to this region here. Doesn't mean that we can't round trip and go all the way down to 18-ish. We can, or Emqq can. But we're getting much closer to the bottom. So we need to keep an eye on this, because this is the fund that has done the best because of its technology tilt. This dollar starts to come down at some point, wherever it peaks from. Emqq is going to do very, very well. So we take a look at the options on Emqq. We take a look at the November puts, there really aren't any. Let me take a look at January, and there's a handful. So it's really not a good option market. And we knew that because we've tried to sell puts on this before. It's just not deep enough. We don't really want to use other emerging market funds because, unfortunately, most emerging market funds stink. We can use country-specific funds, and Brazil is probably one that we would like to look at. So EWZ. If we take a look at Brazil, pull up the December puts, you can see a lot more action in here. How much lower can it go? It looks like this range, 26 to 31, is what the professionals are expecting. So let's take a look. EWZ. Whoa, that is one exciting chart. Isn't that an exciting chart? All over the place. I think it is instructive to look at the whole thing. I mean, it really makes some pretty interesting moves. I would think we get one more down, but not below 26, somewhere right in here. So if 26 is what the professionals are signaling, do you see why I say that? Big numbers in here, right? And it tails off. But this area around 26 not only manifests on the chart, right, just a little bit above these. This seems to have been a jitterbug zone. So this area right in here, that's your jitterbug zone. The odds of it dropping all the way through are pretty slim. Doesn't mean that it can't happen. Dollar could spike a little bit more, but Brazil is an oil producer, and oil is one of the things more likely to make the market get worse. So you see this crash back in 2016. What have I talked about for years now? 2016 is really the super duper massive support levels. Do we get all the way back down to 2016 prices? Again, hard to know. Depends on black swans. So if the price of Brazil comes down to 26, I'm pretty inclined to be interested. I think that we can sell cash secured puts if this goes up a little bit more in price. I'm not really interested at $1 in the 26. You know, that's right around 3%, 3.5%. Not interested. But if this moves a few dollars, and suddenly on the 26, we're getting $3 for a couple of months, over 10%, then I'm pretty interested. Because even if it gets put to me at 26 minus about $3 gives me a net price of 23. And look at that. That's where the volume really falls off. So nobody's really expecting these prices down here. When I think about what I want to sell, I think about the fundamentals first, always the fundamentals first, and then look at where the technicals are pointing us. And then let's take a look at the option market for unusual or heavy activity. So I think this $26 put on Brazil, if I can get $3-ish, pretty interesting to me. So I will put that in the article tonight. If we take a look at our screener, in fact, if we take a look at a couple of other emerging market stocks, let's go over to StoneCo, which is Brazil, finance-based, right? Fintech company that we've been accumulating a little bit of in the past year. Warren Buffett stock, right? Berkshire is invested in this. And this was my original buy zone. Got a little lower than that. So what do? Well, you take the bottom fishing, and now it's the top of the buy zone. You pull this down to where the super heavy volume was. Say, I was close, but I wasn't perfect. So even if you have a cost basis in the teens, which I think my cost basis is 16-ish minus some premium, so 15 or 14. Say, okay, well, that was pretty close. Way better than buying it up here, right? Here's your waves down, and now it's jitterbugging. Does it mean it can't go a little lower? Absolutely. It does not mean that it can't go lower. We can always go lower. However, fundamentally speaking, this company is doing pretty well all of a sudden after having a really rough year on their financing unit. We all know the story of this company by now if we've been following along. If you don't, fintech company, kind of similar to PayPal or Square in Brazil. Half a dozen companies dominate that market. This is one of them. And if I were a betting man, you know that I kind of am, I would say that this is a pretty darn good place to enter. So if we pull this up, say, okay, maybe I already have a starter position in Stone. Do I want to sell some puts? You could take a look at November. $10 puts for $1. That's not too bad, right? If it gets put to you, you have a net cost of 10. Not a lot of volume. There's quite a bit of volume down here. Our open interest at 7. So it looks like 7 is kind of a floor. Let's take a look at January. 8, kind of a floor. Maybe 7-ish. Not a lot of action down here. have some pessimists in here, but I bet these are pretty old bets because there's no volume right now. Seems like this is where the action is, 10 today anyway. So I have to think this through. Say, well, where do I want to be on this? How conservative do I need to be? Do I sell an $8 put because I really don't want it put to me, but I like that 10% of income in 3 months? And if it does get put to me way down here, I can live with that. If I want it to be put to me, maybe I don't have a position. Maybe I sell the 10. I try to get that $1.75 there, 17%. If it gets put to me, I have a net cost of $8.25. I can live with that too. So it depends on you which put you want to sell if you want to play with individual securities in the emerging markets. The reason why I think at least our aggressive investors, our enterprising investors might want this, because it looks to me like this is a pretty easy ride up. I think for sure into the 40s, maybe this ends up becoming some sort of resistance. Why would I say that this might end up being some sort of resistance? Well, because there's resistance here and here. And it seems like this is where the volume of buyers dries up. I think running from 10-ish to 40-ish, I think that's pretty likely to happen. And then we'll see what happens after that. But if you can make 4 times your money in the next year or two, probably be okay with that. Okay. Take a look at Jumia, another one of our emerging market stocks. I already adjusted this one. This had been the bottom fishing. We went through it, right? Went through this support level, which was in hindsight a pretty weak support level. It came down to this area. Now it's jitterbugging around in here. Jumia is still a very speculative stock. However, if you take a look at their balance sheet and what the business is that they're doing and their edge in logistics in Africa, the upside for Jumia over the next decade is actually hard to measure. It's massive. So if this ends up being an oligopoly dominated by 5 or 6 companies, which is what it appears is developing, think about what Amazon did in America, and then realize there's a lot more people in Africa starting a lot poorer and skipping a lot of the phases that America went through with malls and car-centric shopping, and jumping right into the digital age of shopping and securing supplies and groceries online, having them delivered or having a nearby pickup area. A lot of people in Africa still have to get into the middle class. And if you consider the energy dynamics with Africa being energy and mineral rich, at a minimum, when the dollar settles, those emerging markets ought to do pretty well because they won't suffer from scarcity theoretically, right? We know that it's a corrupt system over there, more corrupt than most, not only on the internal side, but, they get exploited from outside, China in particular. But that's still a lot of people that have to move into the middle class. So through all the choppiness, all the volatility, you're probably looking at rising prices on securities in Africa now that they've gotten clobbered. To me, emerging markets look pretty exciting because the dollar is close to peaking. I have a hard time believing it goes above here, but on an event it could. Dollar is close to peaking, and then it'll drift back down, probably over a couple of years, back into this Goldilocks zone. But I think probably closer to the higher end of the Goldilocks zone than the lower. Because in the United States, as I discussed in this interview, the dollar is going to be stronger for longer because that's good for standard of living in America. And he put in the political comment that the Democrats are more bullish for the dollar. And it's because their constituency is the middle class and lower versus Republicans, which is middle class and higher. So a stronger dollar is better for inflation versus a weaker dollar may cause your asset prices to go up. I think we might get a little bit of both. This spike in the dollar allows the dollar to come down, be good for asset prices without reigniting inflation. Now, dollar gets way down here again, maybe inflation comes back, at least in the United States. But as supply chains move, as alternative energy continues to set records for implementation, as the grid continues to get rebuilt and upgraded, as mines come online over the next decade, as mega plants in EVs and solar come online, inflationary pressures disappear. How long does that take? Well, it takes a while. But if we think this through, we're almost done fighting inflation. It's going to come at the cost of burning more coal for a few years, but cheap energy is the linchpin on killing inflation in the short run. And in the long run, we know that demographics are more deflationary than all the other factors put together. So if markets get back to equilibrium on things that are temporarily scarce right now, just equilibrium. We don't even have to have surpluses. Inflation comes down dramatically. We know from the leading economic indicators that we've talked about several times now, that's already happening. So this inflation fight, again, is another thing that's closer to the end than the beginning. So whenever this dollar does finish with its peak, and again, black swan events could spike it out one more time. The reality is that the dollar probably comes back to the Goldilocks zone over the next couple of years. So your job as an investor is to know what 20 or 30 stocks you want to own, and which half dozen or so ETFs you want to own, and figure out how to scale in. I think that you're going to have to do some scaling in October because we don't know what the Fed is going to do after October. So if we get a correction here, as the option market resets a little bit, puts got very expensive and overbought. A lot of people were buying protection. Those expire week to week usually. So if we get one good rebound week, that wipes out all the insurance, then the insurance has to get reset and people buy puts again, which means stock market goes down for a while, especially as we run into the buyback blackout period and the news blackout period from companies. Then we run into earnings and pre-announcements. And it seems as if the last hunk of companies that have to revise downward will. Most of those are large caps. You'll get your final leg down in the S&P 500. Again, we don't know if there will be a black swan. We just know that it seems more likely. But we know that inflation looks like it's probably peaked out. Again, X black swan. Russia doing something dumb. OPEC tightening up. Some of the companies that we own, like Ametis, New Fortress Energy, probably want to look for entry points on those. So if we take a look at New Fortress Energy, which is liquefied natural gas, take a look. We get one more down week, probably worth your while to buy more. What are some of the signals that we've seen about recession or no recession? Leading economic indicators are turning over, but the yield curve today signaled that maybe we'll get that soft landing after all. I told you for a few months, I think that the Fed can pull off a soft landing. I'm not sure that's really what they want to do. The dollar gets used for geopolitics all the time. The Fed has a very strong influence on the dollar. So we'll see what happens with geopolitics and potential black swans. I've repeated that a few times now, right? There's a base case that we have to prepare for and act on, but there's also the black swan cases that we have to be aware of. Probably just hold on to a little extra cash. Doesn't mean all of our cash, but some of it, just in case we have an end of the world moment. And if the world doesn't end, great, we have money to invest. And if the world does end, been nice knowing you. Can this come down? Could. This red line here is just the system picking a line where you'd expect there to be pretty strong support. So New Fortress Energy right around 40 seems to have pretty strong support. Doesn't mean it can't come down lower to some of these other levels. That peak, maybe mid-30s. If we take a look at selling cash secured puts, knowing that 35 seems to be a firm floor on the technical side, let's take a look and see if there's any volume on these puts. Not really. These are pretty undiscovered puts. But look, the range is in fact right where we've been talking about. In fact, a lot of these puts might be us. So there's not a lot out there in the put market for New Fortress Energy. If you can try to sell the December 35s, boy, I wonder if that was me on Friday. I suppose I should look at my order book. That's a little cheap. I don't think that was me. I'll take a look though. 350, 3-ish. If I could get 35s, get $3 or so for 35s, be pretty interesting to me. The 40s, I get $4-ish, pretty interesting. That gets me a net cost of 36, which is close to where I think my floor is. Makes it more likely that they're put to me. Remember, the higher your put strike price, the more likely it is to put to you. So you have to balance. You just want to try to scrape out some income, or are you trying to get it put to you and have a good net price? Some of these stocks that I've been buying, because they're not tremendously popular yet, you don't always get a great deal on the options because there isn't much of an option market. Up quite a bit today on the OPEC news. I wouldn't bother with it. Let's see what OPEC says. You should all have at least a starter position in this anyway. I have a full position. So if we go through the screener over at TradingView, I just have it set up for the entire Russell 1000. You'll see there's a handful of companies that are oversold on the daily. So if you were swing trading, you could use this. Ford is pretty interesting. Oracle, if one were so inclined. I have a lot of stocks that I can take off of the list. I don't think I'll ever be back in Spectrum Brands. Clorox, I must have just been tracking. I would never buy that. I have no idea what's going to drive profits for Carnival going forward. Nike, interesting. How does it look on a longer term chart? Let's take a look at the weekly. Is there much that's oversold? Intel on a longer term time frame. So there you go. There's one for Intel we should take a look at. Warner Brothers Discovery. Church & Dwight is like Spectrum. Interesting companies. Not in love with them. Comcast, another company we like. Always looking for oligopolies. Oligopolies are your friend. Zoom, I would put into the Coinbase category right now. Seems like a pretty interesting play, but hard to value it. So we need to be very careful about accidentally buying the middle of the market. Really want to see some capitulation all the way down and then a new rally start. So I'd be very cautious about buying into this. I like the company. I think they have a good long-term future. Not sure if they have another leg or two down. Teladoc, I've sold a couple puts on that. Verizon, I'm not really interested in. Nike, I'm not really interested in. Meta, Facebook, I'm not really interested in. Lumen, we got rid of. Walgreens, we got rid of. Kohl's, at the right price, becomes a pretty interesting real estate play. 3M, not interested in as a special company. Not interested in them as a special company. I probably don't understand Spotify as well as I should. I'll leave them on there because I'll try to do some homework. WestRock is a commodity company. It hasn't done things that I really would like to see over the long term. You know, this is, to me, I'd rather deal with Freeport-McMoRan, right? So let's overlay these. I'd rather deal with Freeport-McMoRan. Wider range, bigger ups. So I'd rather have Freeport-McMoRan as my commodity trade. If there's ever a massive bottom in housing again, which, you know, we may not see again in our lifetime, then WestRock would be interesting. And why do I say that? As the baby boomers age, they're not moving into houses, they're moving out of houses. They're moving into condos, retirement communities, things like that. Unless we allow a lot of immigration, this housing shortage is going to go the other direction. And it could be a very long, slow grind over 20 or 30 years. The housing just chops along. And if the dollar stays strong, interest rates don't head back near zero, that could be the new normal that the Fed is talking about. So the new normal that Jerome Powell talked about last week, something that we all are to wrap our heads around. We know that demographics are deflationary over time. In the United States, that can only be fought with immigration. But once people get here, they're no longer really pro-immigration, are they? So we have a lot of people in this country that don't like immigration. It's universal around the world. Oh, it's the new guy's fault that something's wrong, even if there's nothing wrong. So we'll see how that plays out. But I'm just warning you now that I think that housing is potentially choppy for a very long time. That's good for a company like Open Door. So if they get through the short-term problems that they have, and I think they will, again, they're an oligopoly leader. And when people need to move, they want to move quick. So they're more willing to sell their house to somebody like Open Door before they move into their new condo. They'd rather have Open Door buy their house and do $10,000 or $20,000 in repairs than them doing it out of pocket before they move to their condo or retirement community. One of the reasons I really like Open Door is because if they get through this financial issue, they probably going to do really, really well long term because the number of transactions they can make and the amount of infrastructure they have to build out just scream lower expenses, higher revenues. Then we'll see if they have somebody else jump back in to compete with them. But given that they've cut a deal with Zillow, who could that possibly be? I'm not really sure. I think Open Door actually becomes a takeout target at some point. Speculative stock at this point, or borderline speculative. If you take a look at the options, you start to see there's clearly some interest in this company. Somebody's selling puts down here at $3. Somebody, right, in the call market. Why on earth would somebody do this, right? They're expecting something good. Got some action in here. I don't think it can move this much this fast, but is there anything out in 2024? Oh, look, already people buying calls way out in 2024. This is what you call unusual option activity. Why'd somebody do that? Why are they selling these puts? So either there's a buyer and a seller. Somebody thinks that Open Door is probably going to zero. Other people think this is a great way to make some income. I'm in that second camp. Why am I spending all this time on Open Door? I think you're probably seeing a heck of an opportunity. There you go. There's your new chart. Somebody says that Open Door's business model is based on people selling their most prized asset at suboptimal prices. No, that's not really what it means. I'm guessing Sandy's a real estate agent. It's a convenience. Most elderly people don't fix up their house, right? Most elderly people don't fix up their house. So in order to put it on the market and get a quick sale, within 30 days before they move, which is often forced upon them, Opendoor has a role. Opendoor also has an opportunity to partner with private equity to upgrade neighborhoods that are in those in-between neighborhoods, between a good neighborhood and a bad neighborhood, and to gentrify areas. It's not currently their business model, but I guarantee you that private equity is going to talk to Opendoor and say, look, we've got an idea. You know that I talk to private equity firms. You know that I talk to family offices. Opendoor is going to get private equity interest. And somebody's going to open up their checkbook to them and say, look, this is what we want to do. All those little signs that you drive by and they say, hey, we buy ugly houses, that sort of thing. Opendoor is going to compete with them. And they're going to do it digitally with the backing of private equity. So I think the Opendoor is in a bottoming process. And I don't think that their business model was ever a bad one. I think it's always been a good one. I think they've had to learn how to navigate the real estate markets a little bit better. And we know the interest rates aren't going to go much higher and probably drift back down, especially if there's a boomer-led crisis. It's starting to look like the boomer crash, the boomer bust that we've talked about, might be a more stretched out thing. It might just become part of the system. And that makes sense because they're not all going to get poor or have to move at the same time. It'd be a strung out affair. You really have a long ramp for Opendoor, big upside ramp over a long period of time. And when private equity gets in bed with them and says, hey, let us give you this money for a piece of the action, you're going to see this stock go back up. And I think you're going to see it run towards 20 in the next couple of years, which is what those options were suggesting as well. Somebody asked about Wework. So in my opinion, hybrid work is here to stay. And I think that small business has some use for WeWork type of facilities, but there's already competition at the local levels. Here in Milwaukee, we have 3 just small competitors to WeWork that I know of. They're just local. Somebody buys a building and on one of the floors, they do something a little different with it. It's basically a competitor to WeWork or Regis. The ability for WeWork to be a trade, I think, is there. I think you can trade WeWork if you are so inclined, but I like to trade stocks to the upside in the short term that I think also have long-term upside. I don't know that WeWork has long-term upside. I think it's another one of those stocks that can be very choppy. And if you're a great technical trader, you can always trade something like that if you have an insight and understanding. But I don't think WeWork has the double setup that I like to see. Long-term and short-term, right? Long-term upside traded on the way up. Somebody asks, do I think that Bitcoin weakness is a product of dollar strength? Now, I've said over and over again that the reason that Bitcoin is weak is because retail is panicking and the family offices and the wealthy are buying the Bitcoin from them. It's the same thing over and over again, rinse and repeat. Retail panics, the rich buy it cheap. Bitcoin's going to 100,000 at least, probably 300,000 to 500,000 this decade. I think if you're not buying Bitcoin under 20,000, just a little bit at a time, they're making a horrible mistake. It could be one of the greatest commodity-like trades of all time. It might end up being the greatest commodity trade of all time. MP Materials. Yeah, MP is the other company that we like on the EV revolution. It looks like we have this buy zone correct. Doesn't mean that we can't get another leg down. And it could even be horrific. It could go down into the teens. I don't think so, but we'll see. There's not a lot of selling pressure once you get through this area. I mean, there's nobody left to really sell. I mean, could you hit an air pocket on bad news and drop to here and then the vultures come in? Yep, you could. And if that happens, if this stock goes down to middle teens, you're going to want to back up the truck because they're going to end up being a monopolist for a little while before the oligopoly develops. During the years when they have very little competition in the United States for processing rare earth metals and doing the magnets for EVs, the stock has just a pretty huge upside ramp. I think for sure it gets to those upper 50 levels again, right around 60, but I think that it runs all the way up here. And I think it could go further. Sheer volume of what they're going to be doing is going to be pretty massive. 1, 2, 3, 4, 5. If you believe in 5 waves. So remember, it's the processing of the metals. They don't have to be the hard supplier. And there are other mines coming online. So they're just going to drop a lot of money to the bottom line. But it is still a trade. Because at some point, every commodity cycle hits its peak and then it comes down really hard. All right, let's call it a day and look for this rally to end and really think about what you want to be buying later this month and what you want to sell puts on, because you're probably going to get your cash levels down quite a bit. And you only are going to need to hold a little bit of cash after the end of this month, I think, for black swans. Maybe it's next month. We'll see. But all you're really going to need is black swan cash by the end of the year. So whatever your normal black swan cash is what you're going to get down to soon, like in the next 2 or 3 months, it looks like. All right, everybody, have a good day, and we will talk again soon.